independent AML review is not supposed to be someone opening your compliance manual, reading a few pages, and declaring that everything looks fine. A real review asks a harder question. Does your money services business actually operate the way its policies say it does? That means checking services, transactions, reports, training, and corrective action. A policy can look perfect on paper, while day-to-day operations tell a different story. Today, we are breaking down what an independent MSB anti-money laundering review actually tests, and what business owners should expect before the reviewer arrives. Under the federal rule for money services businesses, an AML program must provide for independent review to monitor and maintain an adequate program. The scope and frequency of that review must be commensurate with the risk of the financial services the business provides. That language matters. The review is not automatically the same for every MSB. A single location check casher does not present the same risk as a multi-location business that also sells money orders, transmits funds, exchanges currency, or operates through agents. And independent does not necessarily mean the business must hire a CPA or a large audit firm. An officer or employee may conduct the review, provided that person is not the individual designated to assure day-to-day AML compliance. The review is also not a government approval. It does not guarantee that a bank or regulator will agree with every conclusion. Its purpose is to test the adequacy of the program, identify weaknesses, and give management a defensible path to correct them. The first thing a reviewer needs to understand is the business itself. What services are offered? How many locations operate? Is the company acting as a principal, an agent, or both? Who are the customers? What are the typical transaction amounts and geographies? The reviewer compares those facts with the company's risk assessment and written AML program. If the policy describes a low-volume, single-service operation, but the business now processes millions or has added locations and products, the written program no longer reflects the real operation. This is where stale risk assessments, copied procedures, missing service descriptions, and unclear agent responsibilities often surface. Next, the reviewer tests the 4 core parts of the MSB's AML program. First, are the policies, procedures, and internal controls reasonably designed for the business's actual risk? Second, is a qualified person designated to assure day-to-day compliance? And does that person have enough authority, information, and time to do the job? Third, are appropriate employees trained on the rules and red flags that apply to their responsibilities? And fourth, does the business obtain an independent review with a scope and frequency that match its risk? These pillars are connected. A strong manual will not compensate for untrained employees or a transaction system that fails to aggregate activity, and a review has little value if management never corrects the findings. The reviewer then moves from the program's design to evidence of implementation. That may include registration, applicable licenses, the AML manual, risk assessment, prior reports, training records, agreements, transaction logs, customer records, filed reports, investigations, and corrective action evidence. The exact request should follow the services offered. For example, a money order seller may require testing of the records created for cash purchases from $3,000 through $10,000 inclusive. A money transmitter may require testing of applicable funds transfer records and suspicious activity controls. A check casher may require testing of customer identification, cash aggregation, record retention, and the way unusual activity is escalated under the company's procedures. The reviewer is looking for consistency. Do the records support the conclusion in the report? Can another qualified person follow the work and understand what was tested? Transaction testing is where the review becomes more than a document check. The reviewer selects a risk-based sample and traces transactions through the process to determine whether controls are designed correctly and operating as intended. Consider currency transactions. Multiple cash-in or cash-out transactions must be treated as a single transaction when the business has knowledge that they are by or on behalf of the same person and total more than $10,000 during one business day. So the reviewer may examine whether activity is aggregated across tellers, registers, shifts, services, and when the business has that knowledge, locations. The reviewer may compare transaction data with filed currency transaction reports to identify late reports, missing reports, incomplete fields, or incorrect aggregation. For covered MSB services, the reviewer may examine suspicious activity monitoring. Were red flags investigated? Was the filing decision documented? Was a required report timely with supporting records retained? The reviewer may test money order logs, funds transfer records, customer identification, voids, refunds, unusual patterns in activity just below reporting or record-keeping thresholds. If the business uses software to identify or aggregate transactions, the reviewer should not assume the software works because a vendor sold it. Test transactions, system settings, user access, exception reports, and manual overrides may all matter. This is the central question. Can the business show that its controls worked on actual transactions? Written attendance records show that training occurred. They do not prove that the training worked. A reviewer may interview the owner, compliance officer, managers, and frontline employees. The questions should match each person's responsibilities. Can the employee explain identification, daily aggregation, potential structuring, and escalation? Can the compliance officer explain how investigations, filing decisions, and supporting documents are handled? The reviewer also compares the answers with the written procedures. If every employee follows a process that is different from the manual, the issue may be the procedure, the training, or both. Effective training is practical. It uses the business's services, forms, systems, and real-world examples, not generic slides that employees forget as soon as the session ends. One of the most important parts of the review is what happened after the last one. Were prior deficiencies corrected? Who was responsible? When was the correction completed? Was the fix tested? Did the same issue appear again? An unresolved finding can become more serious over time because it shows that management knew about a weakness and did not fully address it. A good reviewer distinguishes among observations, isolated exceptions, and systemic deficiencies. The report explains the condition, evidence, risk, and correction. Management documents its response, owner, target date, and proof of completion. The final report should be useful to the business, not merely impressive looking. So what are the warning signs of a weak independent review? The same checklist is used for every type of MSB. No transaction sample is identified. The report says testing was completed, but does not explain what was tested. The reviewer evaluates only the manual. Prior findings have no status, or the report concludes the program is effective without supporting work papers. A short report is not automatically a weak report. A small, lower risk business may require a narrower review, but the work must still be risk-based, independent, documented, and supported by enough evidence to explain the conclusions. The standard is not how many pages the report contains. The standard is whether the review can withstand a reasonable follow-up question. Before your independent review begins, gather the current AML program, risk assessment, FinCEN registration, applicable licenses, training records, prior reports, corrective action evidence, and complete transaction data for the review period. Confirm that the list of locations, services, owners, agents, and principals is current. Make sure the reviewer can reconcile the transaction data to the reports and records being tested, and be prepared to explain how the business actually identifies, investigates, escalates, and documents unusual activity. Do not create records after the fact to make the file look complete. Identify the gap, explain it honestly, and correct the process. A defensible review is built on accurate evidence. At Fourth Pillar Compliance, we conduct risk-based independent AML reviews designed around the services your money services business actually provides. We test the written program, the operational records, selected transactions, employee knowledge, and the status of corrective action. If your bank has requested an independent review, or you want to identify weaknesses before they become findings, visit fourthpillarcompliance.com. And remember, the question is not whether your policy looks compliant. The question is whether your business can prove the program works. This video is for general educational purposes and is not legal advice. Requirements may vary based on your services, role, location, and specific facts.